This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today is the most important jobs data of our life, okay? Now... It might be a bit hyperbolic, his words, not mine, but there's been an awful lot of people asking me questions along these lines, right? Have we got a daily cycle low where I originally had it? Did we just print a slightly later but legal day 66 low? There's a whole heap of these questions. Did the cycle low fail? Am I stopped out? Do we have to adjust the count, as I said? Is 85 to 87k next? And how do I know all of this? So I'm going to run through all of this in detail because there's many questions, and I'll show you my rationale for this. Okay, time, we have got a jobs read, and it is pretty important. I don't know if it's the most important of our life, but here's why the jobs report matters today, okay? The report could either confirm or dispel fears that the Fed will pause rates in 2025. And if I pull up the CME right here, you can see that we are currently pricing in a 93% probability that at January's FOMC at the end of this month, the 29th, we are going to see a pause in rate hikes. And the reason this kind of matters so much is because rates are already too restrictive, but for some reason the Fed is hell-bent on creating this very strange controlled demolition type environment, according to this crackpot camel on the internet at least. Now, back to this jobs thing, okay? The context. After the December FOMC hinted at ending rate cuts in 2025, which as I showed you is already priced in, stronger than expected data created fears of a pause, and this has pressured stocks, driving the S&P lower, albeit into a cycle low. And so if I pull up an S&P 500 chart, you can see we are right in the timing band to see a daily cycle low. We only really need to see a break above this downward in red to confirm that it is on like Donkey Kong, and if we were to fail the cycle here, then that would set up a decline into a weekly cycle low. So from a cycle perspective, nothing too out of the ordinary. But the reason this jobs report is so crucial is that the rate cuts drove the 2024 rally, and if the Fed pauses, it creates a headwind for equities. And of note here, because that weekly cycle low is coming into focus, it wouldn't be that out of the ordinary, right? Remember, the cycles are in control and everything else is a narrative that is fitted to explain away the price action. So if we were to start a decline into a weekly cycle low, we could certainly use a bad jobs data report as the narrative to explain away that decline into the weekly cycle low. And whilst no rate cut is expected in January, this could easily shape the Fed's tone on future policy. So there's a couple of market scenarios here. Number one, the data comes in too hot and the Fed pause fears will rise. If they're just right, we could see cuts into 2025, a huge repricing on the CME in favor of putting a new 25 basis point cut on the table. And if the jobs data is too cold, then we're going to see growth fears emerge. So in scenario one, more than 200k jobs added and unemployment below 4.1%. This will likely mean that stocks drop 1%, treasury yields jump towards 5%, pressuring equities, small caps leading the decline, moderate losses in the defensive sector. We may also see a 10-year treasury yield towards 5%, which of course will further pressure equities. We'll see the dollar index rally somewhere around 1%, approaching 110. Gold will probably drop sharply. And from a cycle perspective, it wouldn't be out of the ordinary to expect that, right? Because we know we've got a daily cycle low coming into focus in the not too distant future, particularly if I turn on my cycles. So we may well confirm an early one here. That's definitely one scenario that's on the table, since we are indeed inside of that window. But again, from a cycle perspective, if we are to get a flush to a new set of lower lows, then that of course would make sense from a cycle perspective. Scenario two is that everything is just right, okay? We add somewhere between 50k and 200k jobs. Unemployment sits somewhere between 4.1 and 4.3%. And this could lead to a modest relief rally across all the indexes. We could see small caps and tech lead the gains. The yield on the 10-year should start to drop as the dollar weakens slightly. And this would also fit a cycle perspective, since the Dixie is in that timing window now to start a decline into another daily cycle low. And of course, if this is to happen, then that would likely force that gold rally, as I was just talking about a minute ago, which would see this breakout actually be confirmed. Because of where the daily cycle low is, I still think we would have to get some kind of breakout or retest and then resumption, and that would give us a daily cycle low, and of course we could force a weekly cycle low in here. And scenario three is that it comes in too cold, so this would be less than 50k jobs added, unemployment spiking above 4.3%. There might be an initial rally, bad news equals rate cuts, right? But growth fears will follow, pressure in cyclicals, defensive sectors will likely outperform. The 10-year treasury yield will drop sharply, nearing 4.5%. The dollar index will fall around 1%. Gold rallies harder on a weaker dollar. And so the bottom line is the biggest risk is a too hot report today, which will push yields above 5% and intensify the sell-off, which of course would be on our way for a weekly cycle low in the stock market. I also think it would be kind of bad from a technical damage perspective, since if this cycle fails, then it puts my yellow squiggle on the table, doesn't it? The base case outcome is a Goldilocks number somewhere between 100k and 125k job adds, and that will calm the Fed pause fears and spark a relief rally. And of course, we should see this 93% reprice in favor of cuts. One more thing that I think is of note here is again, we are early in a daily cycle. Now, it doesn't mean we couldn't have had a day 3 left translated high and then start to break down. But on a balance of probabilities, even if it is a left translation and a fail, you'd at least expect another week of either chop or upside here before it truly fails. So from a cycle perspective, I would suggest that the jobs data is not going to be that bad. Knowing as well that gold is working on a breakout retest into that cycle low and resumption, again, speaks to the jobs data not being super bad. The dollar, as I showed you earlier, from a cycle perspective, is ready to have a pullback into a daily cycle low, which again fits the idea that this job data won't be too bad. And we're going to cover Bitcoin in a great detail in a minute, but at the moment, it's early in its cycle as well. So hold that thought, we'll come back to do Bitcoin. As I said, this jobs data comes out at 1:30 today, and I would suggest to you, you don't really need to pay attention to the jobs data. Just watch the market reactions. Know the invalidation levels. They have not changed since the video from 2 days ago where I was sort of ranting and raving about not caring what the intraday price movements are as long as we have not been stopped out, because the stops are the invalidation. So long as we trade higher, then I think happy days, and we'll say the jobs data is okay. And if I get stopped out across the board, then we'll say, okay, bad jobs data, invalidations, and heading towards weekly cycle lows. There's still a whole heap of liquidations going on at the moment, but this kind of makes me think that we are shaking liquidity from the tree. We are shaking out the weak hands and the people that don't know what they're doing right into a cycle low before we then allow this thing to rip higher. So it doesn't mean I'm right about that. It just feels awfully suspect that we're having these big sets of liquidations right into the timing window for a cycle low. And is anything we're seeing out of the ordinary? Well, not according to CryptoCon, as he shows here. This is the 1st of January. We chop around for a bit, find a low, and then blast off. In cycle 2, we did the same thing. This is January, big puke, and then off we went. In cycle 3, you can see that again, early January, we sold off into a daily cycle low and then blasted higher. And right now, we have done the same thing, sold off into a cycle low, looking to blast higher. This is still my base case until such time as I'm stopped out. If I'm not stopped out, then this trade remains valid. Something else to point out here, if you measure this amount of days, this is roughly equal to this right here. So I would suggest to you, we've seen enough flush, we're in that timing window, and all we need now is just some narrative, i.e. jobs, to explain away the upside price action. Of course, if we do this, the narrative will be, well, jobs show that there's no recession, blah, blah, blah. Okay, but ultimately it will just be cycles doing cycle things. And I would suggest to you that whatever the data says today is probably a lie, but we'll deal with that. We'll deal with that at the weekend's deep dive. So to wrap things up here, there was a whole heap of questions, as I said, and here are the questions, right? So let's work through these one at a time, okay? First of all, did the cycle low fail? Well, depending on what exchange you're using, yesterday's candle did, in most cases, undercut this low. But notice on a closing basis, okay, it's a double bottom. So technically speaking, not a failed cycle. We certainly didn't have a daily close below the low from this day 56 cycle low. So therefore, on a balance of probabilities, I say what this is a perfect day 10 backtest of the cycle low. So am I stopped out? No. As always, you can see the public invalidation level sitting at 90k. The stop from this first position is also moved up to that level, so if 90k is traded, it will close both positions out. I'll pay a small loss on the second position, and the gains from the first trade will be locked. So did we just print a day 66 low, or is my day 56 low the cycle low with a back test that just occurred, right? Now, the thing is, TA is subjective. If you want to count this as a day 66 cycle low and go from there, you're entirely entitled to do so. But for me, I still maintain that this is a backtest of this day 56 cycle low, and I have a number of reasons for thinking that. First of all, this day 56 low occurred on a Brexit cross down the bottom, okay? This is synonymous with a new cycle beginning. The other thing we noticed, okay, is after this cycle low was in, notice how it confirmed by not only breaking the trend line, but also crossing above the 10 period moving average on a closing basis and then closing multiple candles above it. So I suggest to you that that was indeed a confirmed cycle low, not just on the trend line, not just because of the SMA, but also because of the Brexit cross at the bottom. I'm absolutely not a fan of indicators, but they can be useful to help you identify where the cycle lows are. All of this stuff, of course, is straight out of that cycle trading PDF. But all of this combined with the fact that we didn't get a true cycle failure because there's no daily close below the lowest low, and the fact that cycles, if they're going to back test the cycle low, usually do so within 8 to 10 candles or 8 to 10 bars, depending on the time frame. And this just so happens to be a perfect day 10 back test. All of this tells me that on a balanced probabilities, that is the cycle low. This was a back test. And now what's going to happen is we're either going to come swinging out of here and we would have wasted about the first 10 days of this cycle, or we are going to complete breakdown, retest, resumption, truly fail, stop me out, lock the profit from the first trade, and then we're going to have to probably spend some time chopping around on our way down to the next early March time frame for a daily and a weekly cycle low. Notice how that also fits with what the stock market is doing. So I say, based on everything I've presented, we have not got a day 66 low, and instead we've got a day 56 cycle low. Therefore, is 85 to 87k next? Is this inevitable? Well, I don't know. is the absolute truth, okay? I don't think anyone can say for sure. What we can say is until such time as we are stopped out at 90k, then again, I don't care. Right? There's no point me stressing and straining over everything that happens in the middle because the trade is very binary. I am correct if 90k is not traded and we start to move higher, even if we don't move strongly higher and we chop around, okay? I know Bob Lucas is calling for a situation where we do something like this, daily cycle low, weekly cycle low, and then go. So that's another scenario that's on the table. But for me, I'm not even going to worry or entertain 85 to 87k until such time as I'm stopped out. And I do think that whilst a lot of people think that's reasonable, 87, 85k, and then we rally, from a cycle perspective, it doesn't make any sense at all. From a cycle perspective, if we see something like 85 to 87 traded, then it probably suggests to me that we got a day 5 or 6 high, left translation, failure, 87k might provide relief, and then ultimately we're going to do something like this, daily and weekly cycle low, okay? And that is, for me, the next opportunity, which presents a high probability long setup. So of course, anything and everything is on the table all the time because it's a market. It doesn't mean just because I'm saying this that we couldn't go to 87 or 85 and then rip higher. That's entirely possible. I know there's a lot of supporting evidence from different analysts out there that say this is a highly likely setup, but what I am saying is, from a cycle perspective, it doesn't really make much sense. From a cycle perspective, we should be looking for this, chop, cycle low and go, or if we are to trade down, then I would expect something like this, and then we can go. But as ever, for now, 90k or I don't care. So I hope that answers this, right? How do I know all of this? Well, it's subjective, right? I don't know. It's just, this is how I'm perceiving the market, and if you give 4 or 5 other cycle analysts the same chart, they will probably come up with 4 or 5 different interpretations. That speaks to complexity in the setup, okay? Because if you get 5 cycle traders, oftentimes they will agree that they've got 5 counts that are very similar and maybe 1 or 2 scenarios, one for the bullish and one for the bearish case. But right now, if you have a look at all the cycle traders out there, Erlovsky, Andrew, Bob Lucas, me, just to name a few, what you will notice is everyone's got different counts, everyone's got different ideas, and none of us really have a clue what's coming next, right? So when 4 or 5 cycle traders are all coming up with 4 or 5 different ideas, it speaks to a level of uncertainty and complexity in the market. But the good news is, all we got to do is respect risk, stay calm, and let the chart reveal itself. Once the chart has revealed itself, within a few weeks, it might even be less than that, all of us will come back into sync, we'll all have a good read on the market, and it should be plain sailing from there. So the same deal for the stock market pretty much, right? If I'm not stopped out, then I'm long and strong and expecting a breakout. At the moment I'm stopped out, we put downside scenarios on the table and we start to target a weekly cycle low. Gold, to me, as I said, looks to be confirming a breakout, but there is a daily cycle low in focus. If you're a level 3 member, then expect me to be adding, you know what I'm going to add, right? I've presented it in the member section. That, for me, if this yellow squiggle plays, is the go button, right? So expect me to update you as we get there. The silver position is paying us, at least for now, so let's see if we can get a breakout. Bitcoin be done to death, 90k, or go fork yourself. And the last thing, okay, last but not least, is check this out. This is the 10-year yield. That looks like a pretty strong breakout. I would not want to be fading this thing if it was a stock or something else, right? This looks like a legit breakout. But it also doesn't make any sense, okay? It doesn't make any sense. I think we should probably start to entertain a trendline break soon. That's what I'm hoping for. Look out for a big red candle today if it comes. It speaks to a big bull moment. And if this thing continues to snap towards 5%, then I would think across the board we're going to be targeting weekly cycle lows, probably stepping out of the way of the markets, letting the dust settle and playing patient once more. I'm your boy Camel. I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies on a bump.